Good afternoon, everybody. Glad to see you here today in our Long Options webcast. I'm Connie Hill. We get together every Thursday at this time and talk about different ways that we might employ a long option strategy, different factors we might consider. Now, this week especially, and there were some last week as well, there are some stocks that are announcing their earnings that are having explosive moves, right? Are you thinking to yourself, Connie, I wouldn't mind getting in on a little bit of that kind of action? Well, nothing is ever guaranteed, but we're going to talk about some qualities that you might look for in stocks that maybe they might allow us to identify some stocks that maybe could potentially be explosive. So we're going to check that out. That'll be in the details of our discussion here today. Now, I am joined in the chat by my fellow redhead and fellow coach, James Body Boyd. Happy that James is here today. We'll keep an eye on the chat as questions come in. There might be something he can help me out with, but I'll try to answer some questions there as well. If you have questions and you're listening to the recording, go ahead and put your questions in the comments section. I go back and look at those every day and make sure you get your questions answered quickly here as well. Now, I hope you're following both James and I on X. I'm Connie Hill CS. He's James Boyd CS. Post educational content, things we're noticing in the market, things with charts that we think you might find interesting. We'll go ahead and post about those. So it's free to do, free to follow us. Go ahead and do so. If you haven't subscribed already, I hope you're a subscriber to our Trader Talks channel. It just makes it easier to find our content. All right, let's go through our disclosures and we'll lay out what we're going to do here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today should be considered informational and educational. Don't consider it a recommendation. We will be using the downloaded paper money thinkorswim software. It's what you download to your computer. It's the most robust version of thinkorswim software. Past performance of any security or strategy does not guarantee future results or success. All right. Typically, we spend a little bit of time, not much, but just talking over the concept of long options. When we're talking about some of our different example trades, we'll really want to talk about the price, time, and volatility and how that might impact the price of an option. Okay. Now, I'm assuming that for the most part, because this is an intermediate level class, that most of you are familiar with a long option strategy. Many times it's one of the first strategies we learn about as we move from the stock world into the options world. And we know that kind of in our mind, as we learn about call options, they go up when the price of the stock goes up. And put options, on the other hand, they go up when the price of the stock goes down. All right. And so it can be easy to identify like those long calls similar to stocks in that they go up, although they don't have stock ownership rights, long call options. Okay. So typically they're directional in nature. What does that mean? We need the stock to move. Okay. It's not a strategy where you want to buy it and let it sit around or maybe just go up a little bit. It's like, no, we want these stocks moving. Typically we want to identify a target and a time frame that we want the stock to make that move by. The positions are considered theta negative, which means time decay hurts them. Every day of passing time pulls out some value in the premium of that option just for the clock ticking. It ticks on weekends and holidays. You're thinking, man, the market isn't even open then, but you want to be aware, yeah, that could definitely impact the price of your option and what it's doing. They're also vega positive, which means if volatility increases in value, that will increase the premium typically of an option. And that can be a component that you just need to make sure to take in consideration. We're going to be talking about that a lot today. And then keep in mind what your max loss could be in these scenarios. Whatever your net out of pocket is, your net debit, you could theoretically lose all of it. Now, we don't want to have to necessarily lose all of it, right? So we put maybe some things in place to help us manage our risk. But keep in mind, you could potentially lose all of it. Now, what I'm going to do to start out with, I want to go out to the SPX. And we might not need that quite so wide right now. And I just have a basic chart up here. Okay. What do I have? I have a 10-day moving average. I have a 30-day moving average. Down here is implied volatility because we're going to be looking at that. Now, I mentioned to you in the beginning, there were some stocks that are just have been really explosive with some of their earnings. Okay. What are some of those stocks? Okay. Well, today, APP AppLovin Corp, man, they are up 41%. Now, that's really unusual. It is not a very common thing to see a stock be up that percentage-wise in one day. I didn't go out, I didn't read their earnings. However, what can we determine because of that? Yeah, this stock was definitely a mover. And likely any long options, long calls would likely be very profitable with that kind of a move, a $69 move. And then the long put, more than likely than not, those that are expire, I'm going to say in the next month or so, even maybe a little bit further out, they in all likelihood are probably just decreased in value, maybe close to zero. They'll be so far out of the money. We know after earnings are announced, implied volatility drops. We can see that really dropping down here today from where it was yesterday. And we see a slight increase. Implied volatility tends to ramp up as stock goes into their earnings. And you can see this one maybe started at the end of, September, starting that climb. What does that mean? Well, the options were becoming more expensive and more expensive as that implied volatility started to become a bigger factor. Okay, so AppLovin is one that did really well today. Another stock I noticed, and there were a bunch of them to take note of. Core Civic, all right, this stock is up 25% today, again, based off their earnings. This was their little bounce in the market from what a lot of stocks experienced after the election results were in. And then one other one that came through. This was actually either yesterday or the day before. It was yesterday or 2 days ago. Palantir. This day, I can't remember exactly how much it was up, but it was up on a lot. And if I take the low price here before they announced their earnings, and even go to the high price here today, I mean, I'm painting a picture of perfection here, right? That's saying it was about 38% up over that period of time, roughly. Okay, but those are big percentages. And, it would be lovely if we all had access to know what kind of stocks were going to do that for us, because a long option strategy is ideal for stocks that are making that kind of a move. Now, we don't always get those explosive kind of moves, but we can look for stocks that maybe have moved in the past and maybe have a couple of characteristics that we might look for. Let's look at this. We're not going to be looking for entry signals. We are only going to be playing earnings announcements. And I picked out some stocks that will announce earnings this evening, and we're going to keep track of them. Well, at least I am for our example trades. How do you find out who's having earnings? The calendar and the Market Watch tab can be very handy for that. You can see I've got today highlighted, and then I just went down here to stocks that we're going to be announcing after the market closed. All right, around 3:00 p.m. They started coming in. We've got a boatload of them announcing this afternoon. It'll be a lot to keep track of. So first off, let's take a look at stock that's going to announce as soon as we're finished with our class this afternoon. This is going to be Square. After the market, they're saying about 4:00 Central Standard Time is when they will announce. And they had a nice pop yesterday, kind of are pulling back here today. But number one, is this a stock that typically moves over earnings? You can go back, you can pull up a 1-year chart, and you can see, hey, does this stock move around a lot? And we can see historically, yeah, big move there. Oh yeah, that had a giant move there. It gapped up and then dropped all day. This one maybe not as big of a move, but there was a little bit of a drop down there. And then this earnings hasn't happened yet, right? That's what we're looking to anticipate. Now, just wanted you to get a general idea. Yeah, it looks like maybe the stock's been a little bit more bullish than bearish. And then there's a couple of criteria we're going to check out on each of these stocks, okay? Beyond seeing if they if they have moved recently by looking at the chart pattern. Okay, that's going to be one thing to take a look at. And so I'm going to say I'm going to put a moving over earnings, historical context for that. Okay, the other thing we're going to look at is the beta of a stock, which we've talked about here recently. And let me grab something here. The beta of a stock and its current IV percentile. Now, IV percentile might not be something that all of you have the vocabulary for, okay? However, let's talk about it. We've talked about recently, we spent a couple of weeks ago talking quite a bit about beta. And a beta of the average stock on the S&P 500 is a 1. So anything that's higher than 1 moves a lot more than that average stock. So Square moves 2.4 times the average amount. Okay, so it is a very volatile stock. Some people might have a criteria here that they say, hey, I want a beta of at least X in a stock. We're not really going to put that out here today, but I'm going to list out here what to look for. We're going to look for higher betas. Although if it isn't super high, not a big deal. Then the other thing we're going to look for is the implied volatility in the options. Because market makers are going to price that expected move into the value of the options. And so typically what we do is, well, we look at this top one, especially if they have weeklies, right? And we look and see, well, gee, how much is priced in there right now? Geez, for the ones that expire tomorrow, 260% implied volatility priced into the move. What does that mean? It means that they're really expensive and there's an expectation for movement. The other thing we look at here is going to be the market maker move, right? This guy here, 8.27, that market maker move. See if my drawing tools will cooperate. No, I guess they won't today. In any case, follow my big, large mouse that I made especially for you. 8.27. Okay, that's the move that is expected. Now, this IV percentile down here where it says current IV percentile gives you an idea if the volatility is in a range that it's been in the last 52 weeks, if it's been at kind of at the higher end or a lower end, okay? And so this percentile is saying, okay, about the price of the implied volatility priced in the options has been 70% over the last 52 weeks. Right now it's at 70% of what its average is. That's a better way to say it. 70% of what its average is. So that gives you the idea, oh, it's kind of in a higher range than where it has been. If it's a value like 10 or 5, then it's like, oh, well, it's only been lower than this 5% or 10% of the time. So that might imply, okay, implied volatility is on the lower end of things. Now, we don't have to have super high implied volatility, but it's nice to know what it is, okay? So what we're looking for, high movings or movies over earnings, higher betas. We're going to be checking out implied volatility for the near term expirations. And so I'm going to just put implied IV current, I'm just say current expirations. That's what we'll use to identify the difference. And then the IV percentile rank. Now, you don't have to have perfect numbers in every single one of these, but they can be factors that are like, okay, let's consider maybe that might add to the idea that maybe if they come out with some good news, and it's all going to be based on their earnings typically, right? What they say and their expectation, what they think for the next quarter, the next to the end of the year, whatever. You know, all of those are factored in there. But if you've got a stock that's moving and a stock that's not moving, well, yeah, they could have news that makes it move, but it doesn't generally move a whole lot. And so people aren't expecting it to move a whole lot. All right. Hope all of you have, oh, I didn't copy it over here. I'm going to share something with you. as we look at Square, I hope all of you have this market maker move think script. This is just kind of gives us a visual for what we're seeing on the trade tab. Okay, the trade tab on the market maker move is giving us an actual dollar amount. And then the value here is basically converted into a percentage. They're expecting market maker, theoretical in nature, is expecting a move plus or minus about 10.92% or about $8.23. Okay, up or down. Does the stock have to move that much? No. Could it be a dud and not even move close to that? Yeah, it could. In that kind of a scenario, that's not going to be real helpful for a long option, right? They're very directional. Now you can see up here that it puts here on your chart where that market maker move is. I'm going to go to my tools here real quick and look at all time, and I'm just going to see if I can spy market maker move. I found it in my other setup. There we go. MMM chart marks. Is that pretty explicit, explanative there? So I'm going to copy over this think script for you. Those of you that are here live, you're going to be able to see that. Remember, anytime we share scripts with you, they're not guaranteed as to accuracy or timing. Okay. Those of you that are listening to this on the recording, I'm going to post it here. And I'll also post it in the notes. I'm posting it here in my scratch pad. You can pause, write this down. It is cap sensitive, and you've got to have all 9 digits. And the first character in the digits is I shouldn't say digits, characters, is an exclamation point. There's going to be 8 things that come after that. But that's where it starts, right? You take that value, come to your setup, open shared items, type it in or paste it in, right? You put it there, hit preview and import. Remember what you call it. Okay, if you don't remember what you call it, you're going to have a hard time finding it again. Now, something else some people might use as well as all these considerations is how much is this stock moving in the last month, which is this column, or the last 3 months, which is this column. I just have this up on the sectors right now. But you could also plug in any stock that you're looking at using these scripts. You can copy them off here if you want. If you don't have that again, you're welcome to. For checkout says, what the script was that? The script I just put in the chat is this market maker move. Okay, so it graphs it out here on the chart that you're like, yeah, the market makers, that's kind of the move they're pricing in to these options. Now, next thing up is, okay, we're really trying to see if we can catch a break on some of these, right? It's total speculation. We don't know what they're going to say when they announce. Okay, so it is completely speculative. But, if we could get one of these big moves that maybe made it past the market maker move or to the market maker move, we could end up with a decent trade there. Now, they expire, the weeklies expire tomorrow. So some people might go, well, let's let it run a little bit longer than just tomorrow. Okay, so we're going to be looking at these monthlies, the November 15s. What's nice about that is we should have a lot of liquidity in the call side, in the put side. Now, the next step is going to be, well, which one should we choose? Should we choose a call or choose a put? Each of the trades we're going to do today, we're going to do a strangle. We're going to buy a call a little bit out of the money, and a put a little bit out of the money. A straddle is when we go the same strike price. All right, so right now, stock's at 75.58. So the at the money strike price would be this, I guess 76, right? That's going to be the very closest. So the 76 would be our at the money. And then we do something either a little bit, what we're going to do is a little bit out of the money. It means that it's our break even. The stock has to go a little further, but we are paying a little bit less on those contracts. Okay. So let's go ahead on this one. And I'm going to collapse that there. And first one here, I'm just going to make some notes off in the side so you can refer to it if you want to as well. We're going to go here. We're going to go for on the call. We're going to go, I was going to try to do $2 out of the money. So now that it's close to 76, let's go for the 78. Okay, so we're going to go call. We're going to go with the 78 strike. And then the put, let's go ahead and cue this up here. And then the put, we're going to do, if our 77, no, it's our 76, that's going to be our at the money now. We'll go 2 away from that. We're going to go 74 on the put. We're going to buy 1 of each. Now, something that could be helpful to do is to see what your net debit is here, 748. And it would be nice if it's lower than what the market maker move is intending to be. Expectation is that we're going to lose on one side and gain on the other side. All right. When you're pricing in for a maximum loss, though, you want to make sure you're covering the price of both premiums. All right. So if it's less than what we're expecting the market maker move to be, great. Does it have to be that way? Not necessarily, but it's just kind of a, something to watch here. So 78, 74 on the put. I'm just going to kind of write this out here on the side so you can go back and refer to it in your notes. And looks like it's about 743 for that. We are not going to put, at this time, we're not going to put any exits. What are we going to do? We're going to watch it like a hawk tonight. We're going to see how the initial move looks like. See if it looks like it's moving one direction or the other. It's never guaranteed to be there the next morning, but sometimes it gives you an idea, at least the initial reaction from the market. Is it favorable or not? Implied volatility is going to come crushing out of these expensive options, though. I mean, these ones, the 259%, they are incredibly, there's a ton of volatility priced into there. So we're not paying quite as much in that implied volatility per se, but we are buying a little bit more time, right? We'll have till next Friday. And if you wanted to go out even longer than that, you could, right? If somebody said, well, I'm going to go out and give it at least, to the December 20s, you could do that if you're expecting a move and then a continuation of the move. That's when you might go out a little further. Today, we're just trying to maybe capture what we can for the announcement. All right, let's go ahead. We're going to send this in. I'm only going to do 1 contract of each, and we're going to hit confirm and send. Put it over into our bucket of long options, knowing it's going to be a quick turnaround. And so, question was, can we go out further? Absolutely, you can, especially if you think that you want to play the move longer. Okay, that you think, maybe if it goes one direction or the other, it's been bullish, doesn't mean it has to go bullish. But if you think, this could be another pop and it runs a little bit, great. All right, next stock up we're going to take a look at is DKNG, DraftKings. I see that ticker symbol. If you're old like me, it reminds me of Donkey Kong. If you don't know what Donkey Kong is, then you are a youngster, okay? But DraftKings is really the name of the stock. Let's take a look, kind of zoom out. Hasn't made some big moves over earnings, sometimes. This earnings here was not major, but you can see that huge drop off in implied volatility, right? That comes crushing out of the option. This earnings here, it looks like they gapped up and dropped. So there was a lot of movement that day. And it could be that it'd be interesting to see how profitable the long puts or the long calls were at the end of the day after it, jumps up and then drops. Most recent earnings announcement dropped down even more the next day, although by the end of the day, it rallied back quite a bit of that. Where it is right now, we are in the neighborhood, a little bit higher than where it was before they announced that last earnings. Now, I know seasonality, these guys do sports betting fall, of course. We've got your football, you've got your basketball. So there's a lot going on. And we did for a while. I think we're still doing the World Series. Are we doing the World Series still? I'm behind. I know it was the Yankees and the Dodgers. Oh, I think it was the Dodgers that won, right? If I'm wrong, you can tell me, you can correct me. In any case, kind of big sporting events going on. So let's go look at some of these numbers for DraftKings. Beta. It's not as high as what we saw in Square, but it moves about 50% greater than the average stock on the S&P 500. Okay, so it moves around a little bit. Let's check out where it is in its current IV percentile. Now it's 89%. So 89 over the last 52 weeks, the implied volatility, it's quite a bit higher than where it has been 89% of the time, indicating a likelihood that it's higher. All right. So we've got higher implied volatility, higher beta, and we've seen some evidence of movement in the past, although not every single time. But could this be a catalyst for something that's going to move? Maybe so. All right, you guys are helping me out. The Dodgers won the World Series. Okay, I did remember that at the very end of that. Truth wants to know how, what criteria did you use to select the strike prices? That's a good question. We're going to go out. We're going to use the November 15th here. I want you to see the implied volatility, huge, 270% implied volatility baked into the price of these options. Right, it's huge. The market maker move. We're looking for this stock to move 4.47. And what is that percentage-wise? That's about 11% plus. Okay, is that a good size move? Yeah. We see the market maker move here on the chart. Yeah, a good size move is expected, not guaranteed, ever. Right? It's, again, completely speculative. And these are just example trades. We're going to use the November 15th. It's nice that they don't cost, well, the implied volatility is significantly less than they are in that front week. But again, these are monthlies. They've been around for a while. That's when we see lots of open interest, more likely than not. Sometimes the weeklies don't have as much. If we went out to this November and we're looking at the open interest here, like, yeah, we could buy a little bit more time if we were interested in a weekly, but not necessarily the same number of contracts exchanging hands. How did I choose the strike prices? Question is the question that came in, and the answer is I just went a little bit out of the money in an area where there was a lot of open interest. I tried to space them evenly. We may have one that's not spaced evenly due to how the strike prices roll out. But in this case, we'll start our 39 is going to be our at the money. And in this case, I'm looking to go, make sure this still makes sense. It's moved a little bit since I wrote this up. Actually, 39.50 is our closest one. I had selected previously, we're going to do the 40 and the 39, or 51 rather, on the puts. No, that's a different one. 38, and go just the same amount out of the money. So in that case, that would be, let's do, since we have 50% increments here, this is interesting. Let's go basically as close to $1 as we can. Okay, let's go ahead and do the 40-50 strike. There is plenty of open interest. If there wasn't, we might be a little bit more tempted to do something with where that open interest is, but there's plenty of open interest here. Okay, so we're going to go $40.50 on the call side. And again, the 39.50 is the at the money. So $1.50 away from that, looks like we're going to be doing 38. Okay, we'll buy the option there. It's 186. Net debit 381. If there were not, say you didn't, maybe you were trying to maybe target the 38.50 and you weren't comfortable with this open interest and you trade a lot of contracts, yeah, you might not opt for that one. Okay, you might have to go out a little bit just to make sure you have enough open interest. All right, so 380 is going to be our net debit. Is that less than the market maker move? Well, it's nice. It is. It's less than what the expected market maker move is, because we would love that to be huge. We would love for it to be big, right? And remember, typically we're going to lose, ideally, we're going to lose one of them, and the other one is going to move big for us, and we'll be happy campers, okay? Let's go ahead. Again, we're going to send it in. One thing to keep in mind is if these are just example trades, okay? They're going to be done on our paper account. But if somebody were lining up a bunch of these and they were all reporting this afternoon, kind of like what we are doing, but then the next morning, you're like, oh, I've got to manage these, right? If you've got a date for something else and you're going to breakfast with your buddies, that might put a little bit of stress on you. I mean, the Thinkorswim mobile is nice to have, but you wouldn't necessarily, if you're playing specifically for the earnings play, you might not want to go out to breakfast with James. Okay, you might want to be closer to your computer. James could have breakfast, I guess, together and be looking at your computers. In any case, that's what we're looking at here. So the strategy to exit. Salient Joe, excellent question. What's the exit strategy? Exit strategies we're going to watch. We're going to see tonight what they announce. You're going to get a flavor for what's likely to happen in the morning, but not guaranteed. You're going to get a feel for, okay, is it likely to be more bullish or bearish? So we know what to look for. And then the next morning, tomorrow, you're not going to be at breakfast with me and James. You're going to be hunkered down in front of your computer, and you're going to be watching these. Okay, and I have time. I'll show you a little chart sequence I like to use. I'm not sure if I have it actually in this particular paper money. But if we have time, I'll show you something, okay? And basically, if you get a profit that you're happy with, go ahead and take it, you know? So you might be happy with 100%. Your neighbor down the street might not, would only, you know, they might be happy with a 30% move or 50% move. But keep in mind, it can gap up and it can drop after that. It can gap up and it can stay there. It could gap up and continue to run like some of these explosive ones that we've seen in the last few days. I have intentionally here used lower dollar stocks, okay? If you have a higher dollar stock, it can make it a really expensive trade. And it's a speculation trade, so sometimes people don't want to spend that much money on something that's that speculative, okay? So that's the other consideration for the ones that we're putting out here. I'm going to show you one here that we're not going to do, okay? It's one I ran some numbers for, but I tossed it aside. Yeah, this would be called a strangle. Yeah, this is a strangle where it's offsetting the strike price, the at-the-money strike price. If it were at the money, we'd call it a straddle, where they're out, a little bit out of the money from that at the money, then that's what we call a strangle. You know, and visually, I guess you could imagine, you know, standing over somebody and you're trying to strangle them, and maybe you've got a front foot a little forward and a back foot a little bit back, right? Away from the at money, which might be the neck that you're trying to strangle. I'm not really a violent person, but you could use that imagery if that helps you keep track of a straddle or a strangle. All right. One that I didn't, I ran the numbers on, but decided not to show you, and I'm going to show you why. Because sometimes it's helpful to know, why wouldn't you choose something? Oh, that's not the right one. Rivian. They're going to announce. One, it is a lower price stock, but this thing has been on a downtrend for quite a while. It has a decent market maker move here. That's a decent market maker move. It's not showing up here. Let me just check this again. Yeah, I think their earnings are tonight. Yeah, they definitely are tonight after the market closes. I guess there isn't anything priced in on this particular one. You know, you go to the trade tab, it has a high beta, 2.18. So you're like, okay, this thing's a mover, moves over, you know, 200% of what an average S&P stock does. You could come down here, you could look at to the IV percentile, and that's actually really not that bad. One of the concerns that why I said, hey, we're not going to use this as an example trade, is that it's priced so low already that sometimes it's harder for stocks to make a huge move down when they've already been falling, and there's maybe not a whole lot more they can fall. I mean, they could, right? They could lay an egg for sure. But that is one of the reasons that I decided now we're not going to use it as an example. Okay. Look, can you point out the break-even points? AJ, thank you for saying that. When we're looking at the premiums, and we'll just look at this one. Let's see, let's do this one. Affirm. IV percentile, about 62%, decent. Beta, tremendous, 3.47. Well, 347% average. That thing is possibly a big mover. $49 stock, they're expecting and pricing in about a $7.50 move. If we look at it on the chart, that's about 15.2%. So you can go back, you can look at the previous earnings here. You can see this last one may have been their biggest one as far as a dollar move, but you can see where the market maker move is here. You can see, whoa, that is some decent distance away. All right. Again, is it likely that to occur? It's not likely, but it could be theoretical, which is why people say, okay, let's just make sure we cover for that. Okay. If it, for example, Affirm, the one we're going to do right here, market maker move, yep, it's still sitting at there at $7 plus. Current price of the stock is about 49. And so this is kind of nice because it does have single dollar increments, and then we've got this other one here that's a 50-cent increment. The at the money technically is this 49.50. On this one, we're going to go, see if this still makes sense, to go down to 51, and then we're going to go 48. Okay, 51 and 48. So a little bit out of the money. Pretty high delta here though, 0.49. We look at the percentage here, 370% implied volatility priced in here. Boom, they are expected to move, right? What did I say here? I said on the call side, it's changed a little bit since I kind of was looking at it. Let's go, let's stick with it. We're going to do 51 on the call side. And on the put side, we're going to do 47. Okay. Let's go 47.50 here. Okay. 370. Okay. What's that net debit? That net debit is about 738. That's what we would say. Okay, let's cover it. That would be our break even for our worst case scenario in the whole world where you lose on both sides. Then again, you can say, look at the market maker move. Hopefully the market maker move is bigger than whatever your net debit is. Could it be less than? Yeah, it could be less than. It's not a requirement. Okay, it's just kind of a consideration, just like looking at the beta and where the IV percentile rank is. So we're going to put this one in here as well. We're going to put it in our long options bucket. I'm going to go ahead and look at that. Now, there was one trade we needed to follow up on. One and only one. Let me find it here real quick. Let's go to our monitor tab. And it was this MP. Okay, you guys are going to play the deciding role in what we do with MP. A couple weeks ago, I wasn't here last week, but 2 weeks ago, we put on this December 1750 call, lower price stock, and it's done okay for us. It's not like a huge return. We're up 28% in it with a long option. You know, time decay is starting to eat on it. But tonight they announced their earnings. Okay. So if you're a person that you say, I wanted to be out before earnings, this is the day we got in, and you're like, I wanted to be out before earnings, then you would just follow through with your rules. You say, great, we made a little bit. Let's be on our way. Get out. They are going to announce tonight. So the question I have for you, you guys are going to vote. Should we stay in, see if we get a bump, or do you want to get out? Just take your profits, play it on the safe side. And I'm going to go with whatever the majority says here. Okay, whatever the majority says. Let's see here. Just looking at the questions here. So, Salient Joe, this is a great question. Do strangles are best when there is a catalyst happening? We do it when there's a big move expected, but we don't know what direction. We don't know if it's going to be up. We don't know if it's going to be down, right? When we go into earnings, we really don't know. Sometimes people think they may know because maybe they track the company really well. Maybe they track the news really well at that company. But really, truly, we get to find out together. Okay, so it's when an expectation of a big move. And then we were looking for additional criteria to say, hey, let's look for stocks that maybe have, something that we can see that might make it more likely, although never guaranteed, that maybe they could be a big mover, like higher beta, higher percent volatility, and looking at this market maker move. How big of a move is that? 15% for an overnight move? Yeah, that's pretty high. Let's see. Isaiah says, take the profits and run. Jim says, out. Okay, we've got two that say out. For check it, now you're confused on the two between the strangle and the straddle. Strangle, straddle. Okay, together, equal, at the money, strangle. Take the profit, anything above 20% for every trade. I'm a happy camper. Yeah, that's great for checkout. You're saying I'm not greedy. If I have X percentage and I don't want to trade over earnings, I'm just going to take it. All right, you guys are saying take the money, take the money. Okay, I told you I'd do what you said. Okay, so that's what we're going to do. And then you can follow through and see, what a different outcome might be. But you're right, here we're up about 30% in that trade. All right, so let's go to our working orders. And MP is right here. We had put in a place for, we wanted to be stopped out at 50% of the price of the option. We were looking for it to hit a double on the price of the option, get us out at 385. It's not really even close to that. So we're just going to cancel. And we're going to do cancel replace on this one. And then we're going to change this to, well, actually, we're just going to pull out whatever the current limit price is. And we're going to send it on its way. And we're looking to take some profits on that one. All right. So we're running out of time, but I'll make sure by the time the market closes that we're out of that trade. Okay. I followed exactly what you wanted. For checkout, what is confusion? Tell me what your confusion is. Let James and I help you out. All right. Isaiah, question here. What's the difference between IV and IV percentile? They're very, very similar. Okay. But your percentile is on a scale of 0 to 100. Okay. And it's looking at the last 52 weeks and where the implied volatility is. It pricing higher than that, or is it pricing lower than that? Okay. Versus these are specifics into the price of those options. All right, you guys, that is our class for today. We talked about price, time, volatility, what could be going on with these options. Again, if you're somebody that maybe is interested in this type of a strategy, don't load too many trades up for the morning, okay? Because it can get a little hectic. Some of you might get a little bit stressed with that type of a thing. And so just, be smart about it, all right? There's no reason to get excessive and excited, even though there's lots and lots of opportunities out there right now. So, James, thanks for your help in the chat. They were pretty good to you today, James, my fellow redhead. All right, you guys, next week, I'll report back what happened with each of these trades. We'll see how our strangles did, what side we hopefully won on, what side we maybe lost on. Hopefully we got a little bit out of the losing side anyway. And have a great afternoon. I'll be keeping my eye on these stocks this afternoon. If you haven't subscribed. If you aren't following James and I, follow James and I. Would love for you to do that. Thanks, everyone. We'll see you next week. Bye-bye.